afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 1st of June and we have our regular Thursday guest, David Kuo, founder of the Smart Investor, coming to us out of Singapore. David, good afternoon.
Selamat tengah hari, Brian. Apa khabar?
Bye-bye, David. Now, before we get your insights, David, I'm going to take a look at seeing how crypto markets have performed and also then take a look at regional stock markets. We start with Bitcoin, which is at 26,801. It's down 1.77%. Ethereum is at 1,854. It's down 1.06%. Now, looking across the regional equity markets, we start where you are, David. The Straits Times Index is up 0.24%. Bursa Malaysia is down 0.14%. Shanghai is up 0.41%. The ASX All Ordinaries is up 0.22%. The Nikkei is up 0.67%. The Hang Seng is up 0.65%. And rounding up the numbers, we've got the Kospi, which is down 0.3%. David, your view on the mixed markets this morning?
Yeah, pretty mixed, isn't it? I mean, it looks pretty subdued to me, given that there is so much relatively good news around the place, and yet the market doesn't seem to be responding. So I guess they're kind of following the lead from America last night, and the indices in America were indicating that they were a little bit pensive. And when we have a look at the futures market, and that doesn't look too encouraging either. So maybe everybody is just sitting on their hands at the moment and waiting for some really good news to hit the market. Exactly when that will come, I have no idea, Brian.
Okay, so David, let's break this down here. We should be euphoric and doing cartwheels because the US debt deal has been done. It's passed the House, yet there's a lot of murky waters and uncertainty ahead. Please tell us why.
Well, you would have thought so, wouldn't you? I mean, first of all, I mean, there was all this worry about whether or not Kevin McCarthy and President Biden would be able to come up with a deal that they could present to the House. They eventually thrashed out a deal. No surprises there, by the way, Brian. We always knew they were going to come up with a deal, and it went through the House relatively okay, and I think it should probably pass through the Senate as well. But people are saying, oh, maybe it might not pass through the Senate, and maybe the debt ceiling won't be raised. So the thing about the market is they always likes to worry about something. You know, if it's not one thing, it's something else. You know, they like to worry about something. And it is this constant worry that deters a lot of people from investing. And my take on this matter is when there is something to worry about in the market, share prices are a little depressed, as we are seeing at the moment. When there is nothing to worry about in the market, then share prices are very high. So what investors really want is something to worry about rather than nothing to worry about, because when there's nothing to worry about, then of course shares become so ridiculously expensive that most sensible investors don't really want to buy anything until share prices come back down again. So it is this conundrum. People call it contrarian investing, but I just call it common sense. You want there to be fear and maybe a little bit of worry in the market so that share prices are a little depressed, because when there's nothing to worry about, that is when you need to worry, Brian.
So David, talk about worrying ahead. We've got the FOMC meeting coming up later this month. Is a rate hike on the cards?
Well, you see, this is the thing, Brian. I mean, now that we've actually got the debt problem put to one side, and I would think that it'll probably pass through Senate without sort of too much of a hiccup. I think it'll probably get through the Senate. So therefore, the debt ceiling will be raised, and it just simply means that whoever is in charge of the American administration needs to be a little bit more careful in future about spending more than they can afford in terms of the revenue that they collect. No sooner is that out of the way than people start worrying now about what is the FOMC going to do in the middle of June? Are they going to raise interest rates again? So it goes back to what I said. People like to worry, well, not people. Some people like to worry about something in the market. And of course, the next thing they want to worry about is whether or not the Federal Open Market Committee will raise interest rates at the next meeting. At the moment, it's still pretty much on a knife edge. And the data that is coming out at the moment would seem to suggest that inflation is still pretty persistent over in America. So there is probably a fairly good chance that they will increase interest rates in June. And after they do that, guess what, Brian? They're going to worry about whether or not they're going to increase interest rates at the next meeting. And so we have this constant cycle of whether or not interest rates will be raised. And after they've done that, they'll say, when do you think they're going to start cutting interest rates? Well, let me put their minds at ease. They're not going to be cutting interest rates anytime soon. They're certainly not going to be cutting it in 2023. So don't worry about that. Whether or not they will cut in 2024 really depends on how the jobs data will start to play out over in America, how inflation will play out, and whether or not consumers will just carry on spending and pushing up those inflation numbers. So the key things to look for are the inflation numbers and, of course, the jobs data. Those are the main things. Whether or not the US will go into recession, I think there's a pretty good chance that America will go into recession simply because the Federal Reserve knows that without inflation, they're not going to bring down, without recession, they're not going to bring down inflation.
Now, on the flip side of the equation, we have China, which everyone expected to once borders were opened, to basically help fuel the economies around the world, particularly in Asia. That hasn't really happened. Uh, is the data telling us that China is expanding or contracting? Because the latest Caixin manufacturing PMI would suggest that it's expanding.
Yes, and I mean, that should be relatively good news. And yet, the previous set of figures, the official figures from the Chinese government, said that the manufacturing was contracting. But I think we need to remember that the Caixin index looks at the relatively small to medium-sized businesses, whereas the government index looks at the large SOEs and the bigger concerns in China. So it's not a huge surprise that there is a big difference between the two. What we can conclude is that China is struggling at the moment. China is having a problem. First of all, there is the dispute between America and China. That is causing some problems. Secondly, China is hoping that its consumers will be able to go out and drive the economic expansion. That was what they were hoping for, especially after they reopened China. But that's not happening at the moment, primarily, I think, because house prices in China are not rising as quickly as homeowners would expect. And so therefore there is this wealth effect. People always feel better when their properties go up in value because most of their investments tend to be in the homes that they live in. So when property prices go up, they feel quite euphoric. When property prices don't go up, or when they're coming down, then of course, people feel a little bit on the dejected side. I mean, if we have a look at what's happening here in Singapore, property prices are rising here in Singapore. And the latest survey seems to suggest that Singapore is now more unaffordable to live in than Hong Kong, whereas previously it was the other way around. So it is no surprise when you have a look around Singapore, a lot of people are feeling quite cheerful because the house they're living in is actually worth more than what they paid for. So it is this psychological effect that is boosting the Singapore economy to some extent, but it is actually having the opposite effect in China. So until we start seeing house prices in China starting to rise again, I think China is going to struggle. And we only have to look a little bit further to the west from China. Have a look at India. India is going gangbusters at the moment. I mean, the latest economic numbers would suggest that India is definitely going to beat China hands down as far as economic expansion is concerned. And that could be a place where people may want to have a look at putting some of their money, particularly with Indian consumers.
Now, on that note, David, thank you very much for your insights. Thanks for coming on the show.
You're welcome. Thank you.
I'm Brian Fernandez, and we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on BizTech's Asian Midday Market Watch. This interview will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.